Hi and welcome back to my channel. Of course, I'll be talking about tech stocks today, but why? Well, the way I see it, Tesla specifically is a hard company to judge or understand because they do so many different things. We all know Tesla for their cars, but of course they have a solar component to their company and have created a lot of new and innovative technology within their vehicles. The best example would be the controversial autopilot feature that's now synonymous with Tesla. That being said, I'm on the record in numerous videos now saying I personally don't have a lot of faith in Tesla in the long run, and especially in the short run. Every time I say this, Tesla seems to spike in value, so who knows? Maybe it'll be trading for $1,500 next week. Either way, I figured that with the success of my solar stock video, I should make a follow-up about tech stocks. Before I explain what stocks I think are worth buying right now, I have a few caveats for this list. Number 1. None of President Trump's MAGA stocks. In recent weeks, the president has referred to Microsoft, Apple, Google, and Amazon as the MAGA stocks, not only because of the obvious wordplay, but because he believes they'll be vital in the continued growth of the US economy. Considering they're literally the 4 most valuable American companies and have absurd media notoriety, they won't be on my list. Anyone can say, buy Apple, it did gooder than other stocks. Additionally, 2 of the 4 are trading over $1,000, and this channel is dedicated more so to accessible investments and people getting into trading, so they aren't great fits. The second caveat here is that I want to show stocks that are affordable. Like I was saying, I've geared this channel to weekly or monthly investing, and to me, finding stocks under $100 makes investing much more accessible and useful to people watching my videos. And as I've always said, a dividend would be preferable but isn't a deal breaker for me. Now the last caveat. Number 3, I say I'm a huge believer in ETFs and index funds, but for the purpose of this video, I won't include any of those. If you're interested, a simple Google search will show you tons of tech-heavy index funds to invest in. Of course, if you enjoyed this video or any other that I've made, feel free to like the video, subscribe to the channel, and let me know what you want to see next. My channel's growing and it's awesome to see. I really appreciate it, and I want to make content based on what people want to see. Okay, now we can get to the list. First up, we have AMD. This is a fairly risky pick, but a stock that's definitely poised for long-term success. Like many other stocks, I wish I'd bought it a year ago when the price was hovering around $20. Because of a Wells Fargo ratings downgrade, AMD stock was down about 3.5% on Thursday. The price is definitely a little bit high right now, but Warren Buffett and many other top analysts have always said that time in the market is more important than timing the market. On that note, AMD has experienced consistent growth in the market, and more technically speaking, revenue has surged 50% in the last quarter alone. Combine increased revenue, tripling earnings per share, and a decent buy rating on Robinhood, and I'm in. At a price of about $57, this is an extremely accessible stock, and I can't imagine that computer graphics cards will see less demand in the future. Especially when you consider the untapped potential of internet use in places like Africa, I feel confident in AMD. Second up, we have Rapid7, a cybersecurity firm. This one's really simple. It's trading for about $55, has a 94% buy rating on Robinhood, and consistently upwards earnings. Technology is getting more complex, information is more vital than ever, and hackers are always one step ahead. Having a US-based IT security stock in your portfolio could be a great asset for the future. As you can see, Rapid7 has doubled in value since its 2015 IPO, and I see no reason to think that anything changes that in the future. Number 3 is definitely an exciting one. Alibaba is everything that Amazon is not. Yes, it's much more expensive than my target of $100, but I personally feel like being 10 times cheaper than a share of Amazon explains its position on this list. Most notably, Alibaba had more sales volume than Amazon and eBay combined last year. Alibaba has a tight hold on the world's most populous country and is one of the few companies not under the chokehold of the Chinese government. Yes, the government does own a lot of Alibaba's shares, but there are some redeeming qualities. As I've mentioned an almost comical amount lately, many large tech companies make their bread and butter on cloud services. As China continues to modernize and grow, cloud services will skyrocket past anything the United States has accomplished. While Alibaba's cloud unit has been spun off into a separate company in Aliyun, it looks like they're still owned by the parent company. More importantly for things like cloud security, Aliyun is now based out of Singapore and not mainland China. Chinese companies are hard to research, so if you know more than me, please let me know. This stock has a great track record, a high buy rating, and has been hit really hard by the coronavirus outbreak, so right now could be a great time to buy. This is the most speculative of my picks, but I think there are a lot of good reasons to believe in Snap. This is of course the parent company of Snapchat that struggled mightily since their IPO in 2017. They're recovering in terms of earnings and are on the upward swing. More importantly, I think Snapchat's going to be harder to mess up than other social media platforms. Facebook's data privacy scandal, Instagram's fake like issues being so bad they were planning to remove likes altogether, Pinterest copyright lawsuits, Twitter's controversial move to ban hate speech, Facebook's election meddling scandal, YouTube's monetization disaster, Mark Zuckerberg looking like a robot when he testified to Congress, and TikTok literally being owned by the Chinese government. The same Chinese government that spied on millions of people through Huawei and has camps for ethnic Muslims. Seriously, people, get off of TikTok immediately. The pitch for Snapchat is really that all they have to do is not mess up. Please, Snapchat, do not mess this one up. And before I say the last stock, I have a list of stocks that people will inevitably ask about. Enphase Energy, yeah, I messed up on that one. Virgin Galactic, yeah, I missed that one too. Nvidia's too expensive for me, Cisco has limited growth projections, and Adobe's too expensive, and I think that their subscription platform for everything is important. Okay, the moment you've all been waiting for, the last tech stock I think is a better buy than Tesla is Qualcomm. We all know they have a huge market share in the cell phone microchip space, and cell phones aren't going anywhere. Beyond that, Qualcomm is trading for about $90 and pays a dividend of close to 3% annually. Their payout ratio has been extremely high over the past year, but with the new wave of 5G phones coming out in the next few years, there's huge room for growth in this space. They have not increased their dividend since 2018, but again, I think the growth is there. With a buy rating 50% on Robinhood and solid earnings over the past few years, I can stand behind Qualcomm. Additionally, they just inked a deal with Samsung for their new 5G chipsets, which proves my point. That's all for today's video. As I always say, let me know what you want to see and I'll do my best to make it happen. I'll be back with another video soon, and I'll see you then.